Hi everyone, and welcome to another fresh new episode of our Made for YouTube series, where we talk about mutual funds particularly, but also a lot of other topics connected with it. I'm Sumaira Abidi, and the topic that I had in mind today was basically how to select the right advisor. Now I know that a lot of retail investors are increasingly wanting to do it alone, and which is great. If you have the time and the resources to devote to it, it's perfectly fine to do it on your own, and it's really nothing that cannot be done. But if you're someone who's looking to choose an advisor, if you want to know how do I go about selecting the right advisors, and there are hundreds and thousands of advisors now, so how do you know which one is the right fit for you? So there are a couple of pointers, or you can say a checklist that you can employ to do just that. Now, one of the first things that you want to consider is, and if you're somebody who already has an advisor, you'll also find this checklist useful in trying to find out what is the ability or the capability of that advisor, right? So let's begin with somebody who's just starting out, and a couple of the later points you'll find you can employ if you already have an advisor too. So if you're just starting out, one of the first things you want to consider is the advisor calling you incessantly? Now, the very good advisors already would have a bunch of clients, and honestly, to my mind, a very good advisor would not have the time and resources to deploy into going on calling you every 2 days, 3 days, every week. That is just not done. A good advisor will call you once, maybe twice more, but after that, if you don't express an interest, they will move on to the next client. So that is one of the first things. If somebody is going on calling you all the time, you want to be wary of that person. The other thing that you want to see is that if suppose you're evaluating a couple of advisors, is you want to ask that particular relationship manager who will be devoted to you the number of clients that they have. Now what happens is that I, for one, also know that a lot of individual advisors would have clients, 40, 50, 80. I mean, it's not humanly possible for one person to serve or service that many number of clients, right? A good number to my mind would be 25, 30 at the very top. Okay, anything more than 30, you want to know, how they plan to service so many clients single-handedly. So what happens also is that a lot of the advisors have a team, right? So if you have a small team, you want to find out what are the total number of clients that the entire team is servicing, right? Because everybody is looking at growth, but you don't want to sacrifice the minute detailing of your investment at the cost of the advisor wanting to acquire more clients. More is not always better in terms of the number of clients that an advisor is servicing, right? So you want to have dedicated attention from your advisor. So you must find out what is the number of clients that they're servicing. You can also employ it if you already have an existing advisor. The other thing is that there are few who are individual advisors, and then there are many who are associated with the wealth advisory firms, etc. So you want to find out what is the total assets that they are managing, right? Now what happens is that as the asset size grows, you will get some sort of economies of scale. Also, you have better reach in terms of reaching the mutual fund houses, or whatever it is that you're buying from them, the product that you're buying. So a bigger wealth management firm will always have much more inroads into the companies whose products they are selling. As well, not to say that small advisors are bad, not at all. What I mean is that a large advisor has influence, right? Many small advisors are doing very, very good work. So if you're really looking for that boutique kind of experience, you may find that small advisors are more suitable to you, because a big advisor, you may just be a small fish in a big pond, right? So those are things you want to consider, that which is the right fit for you. What is it that you are looking for in terms of the advisory? You must also find out about the back-end team. Now here again, there is some difference between small and large advisors, because large advisors have the resources to deploy in terms of hiring a big team to sort of not just manage the client portfolios, but also do intensive research. I mean, the process not just of selecting a mutual fund, but also keeping up with the developments, the changes that are taking place has become very, very scientific. I mean, down to how much allocation each scheme must have in your portfolio, what is the optimum allocation, which schemes have overlapping stocks, and therefore which scheme to give how much exposure to. I mean, all that has become very, very scientific. So you want to know what is the back-end team which is servicing your portfolio, right? Not just the relationship manager who's coming to meet you, but what is the kind of support that he has back at the office, even in terms of taxation. I mean, I know wealth management firms who are just servicing mutual fund portfolios, but they have a tax team too. So you want to find out all of these details, basically how scientific or data driven is their process, and what are the kind of boots on the ground that they have in terms of servicing each client, and therefore will each client get their full attention. The other thing you want to find out is when they recommend a scheme. Now, a very good advisor will never come to you with one scheme. A good advisor will always come to you and say that, what, you have money to invest, let me assess your risk profile, let me make an asset allocation plan based on the kind of goals that you have, and then we will find the right products which will help you reach those goals in the most optimum manner. So if anybody comes to you and just says, this scheme is very good, it's a new scheme which has just been launched, redeem your money from XYZ scheme, put it here, that is the mark of somebody you want to stay away from, right? A good advisor will always take a more holistic view of your portfolio and not just with blinders on, just want to look at any one part of your portfolio. So remember that you want a more holistic portfolio, and when they give you the products for that, suppose they recommend 5 schemes, you want to find out why these 5 schemes, what is so unique about these 5 schemes, what is the process with which you have selected these 5 schemes, how do they fit my goals as well. Suppose you have a 10 lakh portfolio and the advisor gives you 5 schemes. Now, ordinarily some may think that, okay, 2 lakhs into each scheme makes sense. You want to find out why the allocation to each scheme, right? He may suggest 3 lakhs to one scheme and 50,000 to 2 others. You want to find out what is the basis for advising that allocation or recommending that allocation. I mean, all of these are things that you want to consider and debate with your advisor before you actually commit your money. You want to also find out whether the schemes which have been recommended by the advisor have investments from the advisor himself or herself, as well as from their company. You can find out. You can ask them, are you investing in these schemes yourself? Are they unique to me? And the other thing is that a lot of people come to clients and say that we want to offer you a tailor-made experience. That's all very well. I mean, I would love to have a unique investing experience for myself, but if a person is servicing even 30 people and making 30 unique portfolios, are they able to scrutinize those 30 portfolios on a daily basis? Because things are changing very, very rapidly. The market, the external environment, companies, their fate is all changing very rapidly. So if your advisor is offering you a unique experience, you want to be sure that they're able to deliver on their commitment of, after once the sale is done, once you become the client, that will they be able to closely monitor your portfolio, and are they closely monitoring those 30 other portfolios that person is servicing. Also, you want to know what has been the past performance that advisor has delivered. Has it been in line with the market? How have they done in bad cycles? How have they delivered in good cycles? Is their return only very, very average, or is their return good? And particularly, in bad years, what has been their performance? You want to find that out. A lot of the bigger firms are also getting their past returns audited, so you can check with them if they have an audited copy of their returns, right? So all of these are points that you want to be certain about before you actually sign the check. You also want to find out how many of their calls have gone wrong. Now, it's very possible that even the best of advisors will have a few calls which have gone wrong. Does your advisor honestly admit to it? What was the course correction that they did? When they found out that some scheme which they invested in wasn't all that was promised, how did they course correct? Or does your advisor say that, we've had nothing gone wrong? I mean, to my mind, that's just not possible, or it is just stupendous luck. But it is very possible that things can go wrong. Even the best advisors can have bad days. So you want to check with them and see and judge for yourself the honesty with which they provide the answer to that. And last but not the least, you want to know how knowledgeable your advisor is. Now, on this very series, we have done a lot of work on educating investors about the basics of mutual funds and some very, very nuanced points. So you want to educate yourself a little bit about, the questions that you can ask your advisor, right? If you're investing in an equity scheme, you want to find out what is the allocation to the top 5 stocks, what are the top 5 sectors, who's the fund manager, what's the track record of the fund manager, etc. If you're looking at debt schemes, again, the first thing you want to know is, what is the kind of exposure that they have, what is the AAA component of that product, and so on. And also you want to ask your advisor, how often they will be providing you with the summary of how the investments are doing, how to read that summary, what to make of it, which is the benchmark that you should be tracking with regards to your investment, which is the kind of return. Now, a lot of people offer CAGR returns. You want to also check whether they will be offering you rolling returns, right? Or you can even calculate it yourself. There are a lot of tools now available on the internet which you can use to check. So basically, this was what came to my mind in terms of what I would look at asking an advisor before I look to hire them. And I hope that this has been helpful for you too. Thanks very much for watching. If you have further questions, I look forward to answering them. Thanks very much. Stay safe.